This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. I'm just a skeptical guy. That's all. I'm just a skeptical guy. Just prove it to me. Show me some proof. Don't ask me to trust. Don't just tell me to go on blind faith. Show me something. That's what I want. And I'm not afraid to admit that's what I want. The pack doesn't have me. The herd doesn't have me. If you are listening to me, you probably only listen more than once because you relate to this idea, this concept of skepticism. Show me the proof. Show me the proof. Now, I'm going to play a clip. And as I cue it up here right now, I'm going to cue it. Let's see. Let's cue it up. And it's a clip from a guy who I actually met briefly, but he really didn't want to talk. I'm not even sure he used language with me. I think he just grunted at me. And I say that affectionately because I really like the way he thinks. I like the way he talks. And that would be Hugh Hendry, who has become a fairly noteworthy hedge fund manager in the last bunch of years. And what's interesting about him, and actually I should say I met him in Tokyo, I asked him up here on the podcast, and he basically gave me that look of like, get away from me, kind of a combination of disgust and fear, and I'm not really sure what, but I never found out. But that's irrelevant because I still like him. And I still like the way he thinks. So I'm going to play this clip. I'm going to let it run, be a little self-explanatory. I should point out that Hugh Hendry, as far as the way he is positioned, either by the media, himself, other players, does not appear to be a trend-following trader, at least not in the classical way that I talk about them. But his response to some questions is really, you just all of a sudden go, wow, hold on. What kind of trading is he really doing? Let me let this clip play.
You said your goal was to become like a piece of plasticine. And that's why I called your chapter The Plasticine Macro Trader. What did you mean by that?
Again, it's emotional intelligence. There was a fashion for a time for having like words like conviction and focused, having a focus fund, a best ideas fund. These are remarkably emotionally loaded terms. So this Danny Boyle movie that's out just now with The Climber, I thought that was a great example of the paradox of being a risk manager. The climber, and he's on his own, and he gets trapped, and it's his arm that's trapped, and he's running a very focused fund. He only has two arms like the rest of us. Yeah? And so he recognizes rationally that he's got to let go. He's got to liquidate the portfolio. One of the arms has got to go, but it's not easy. Not easy, two arms. And that's a fabulous story because it's the opposite of what we'd all be dead. Yeah, I mean, who amongst us would have the guts and the courage to saw off the arm? Yeah, and I liken that to the world of investing. We spend so much time, resources, and money trying to see the future. Really, we're spending money trying to delude ourselves. You have no chance of seeing the future. Yeah, and it's better to recognize that. So again, as I think about it,
yeah, I love that. Right, that's trend following 101. The ability to see the future is not an ability that exists. It's not a real ability. I mean, the people that think, the people that say they can see tomorrow, let me let Hugh Hendry continue.
The worst thing that happened to Western civilization was the US government's program in the 1970s to try and reduce fatalities from road accidents, and that led to the creation of the inflatable, the airbag. Yeah? And it cost billions to achieve. If they'd asked me, I would have invented a sharp object like a dagger, and I'd have had it in the steering wheel. And you would eliminate fatalities, because my God, you would drive carefully, yeah? and there's a book by a hedge fund manager. I was sitting in bed last week reading a story of another hedge fund manager, and he was running a statistical merger arbitrage fund. So kind of the gap, a conglomerate maybe trading at a discount to the sum of its parts, and then you kind of try and take market risk out. He was running market neutral. And I was reading, being deeply impressed by the intellectual rigor that he was applying to his ideas. And then he then goes on to record an experience in Dallas, I think it was, in Texas, with an oil rig business. And there was one of his competitors, and the degree of knowledge that he brought to bear on the subject matter. In fact, before he took the position on, he took an engineering course at university to get insight. And all he was doing was building this superior airbag. And in 2008, both of their funds disappeared. They were actually driving their cars too fast. So in some respects, I don't want to know.
I don't want to know. What a great way. Who says that? Trend followers say that. Essentially, I don't want to know. It doesn't necessarily help you. Maybe it just messes with the emotional intelligence. But what a great fun story. Here is Hugh Hendry, successful fund manager, and looking at one of his peers, this brilliant guy who has all this insight, all this fundamental information. But the risk management wasn't there, and the fundamental insights sank him. He thought he knew something special, and he didn't. He fell in love with the knowledge. It's like the guy that says, hey, I'm going to go invest in fast food restaurants. He sees what people are eating, and so he decides to invest because he's pulled some new piece of information. He's fallen in love with his analysis. Falling in love with your directional analysis, though, that is not risk management. Let me let this clip with Hugh Hendry continue.
I had an analyst just left us last year, and he had some fantastic insights on this pharmaceutical business, and he started telling me, and I started getting excited, and I started to think I could see the future, and I suddenly, rather than having a 50 basis point holding in my fund, I had a 250 basis point holding, and of course it had a profit warning, it fell 40%. Again, we had deluded ourselves, this notion that we've seen the future. So in some respects, I go around and I don't want to know. I don't want to do stock research. I want to have that itch, that trepidation that says, I don't know the complete picture here. And therefore, I watch things like a hawk, and if the chart breaks down, or I trade, I sell. So Plasticine Man is someone that you can pull it apart very, very quickly and then put it back together. I used to say, back to the climber with the arms, I was the centipede. I had 100 legs, right? 100 legs, I could let go of one or two. I ain't going to procrastinate. Yeah? And that's procrastination kills you in a business which is determined by risk.
Procrastination kills you. Meaning, as a trend following trader, you have your rules set. You have your exit losses set. You don't procrastinate when those signals hit to exit, you exit. Let me let Hugh Hendry continue.
That's it. Thank you very much, Hugh.
Quick intermission here after the applause and a few questions.
Is there time for questions? Okay. Anybody have any questions for Hugh? Not for me.
It's a question for both of you. What's the most overpriced and the most underpriced skill in the hedge fund community?
You're good at that, Steve.
I'm not as quick as you here.
Okay. The highest return on intellectual capital of any endeavor in the world, it would seem, is managing a hedge fund. 2 in 20, indeed. Some of these guys get more than that. Yeah, so it doesn't get better. So if you'd never met a hedge fund manager before, it would be logical to assume that they are the brightest people on the planet. Returns match the resource. When you meet hedge fund managers, I'm sure you gather a different insight. But my point is, so I'm up against some of the brightest. I know you get bright doctors, thank goodness, and I know you get bright other people. But I'm up against some of the brightest people on the planet. And I never thought it rational to compete with outsmarting them. How do I outsmart an incredibly bright person? Okay, and I want to bring forward and ask you to consider the overlooked aspect that life is odd, and thank goodness life is strange. Strange things happen. And that's wonderful because very bright people tend to be logical, or they're encouraged to be logical in the construction of their thoughts within hedge funds because they're managing other people's money. I was taught to misbehave. No one teaches you to have intellectual curiosity, to misbehave. So my business franchise is trying to get opportunities from the arcane world of paradox. Paradox, okay? To give you an example, famously, we've not had many Fed chairmen. We've got Bernanke, and then you have Greenspan, and you have Volcker, and that spans 30 years, if not longer. And those three are interesting because it's very obvious who they are. Volcker came and he said, gee, we've got an inflation problem, that's the bad news. The good news is I'm going to do something about it. You're in a recession, he raises interest rates. He targets money, he withdraws the rate of growth in the money supply. So very obvious, very hawkish. Bernanke made no doubts in his introduction when he gave a speech in October 2002. He said, I will print money and I will use the technology of a printing press. We will have helicopters, we will, distribute the money. So very obvious, banana ban, inflation ban, Weimar ban, so you have two, and then Greenspan, we still don't know. Jesus. Anyway, but the paradox is, so here you are, go back to, Volcker comes in August 1979. In October, he raises rates, forget this 25 basis points, 200 basis points. Does it on a Saturday morning. God, I'd have difficulty with my chocolate croissant, but anyway. 200 basis points, hey, well, I'll see you when the market opens on Monday, great. Now the odd thing is, you'd think that would be fantastic for government bonds because, they've been destroyed by the inflation and you've now got this guy taking it on. He's on your side. Policymaker, he's on your side. And the paradox is, despite doing everything, which was what you wanted, that over the course of the next 18 months, the long end of the bond market halved. Within 4 months of that very hawkish stance, the gold price went into a parabola, and we 25 years had to go past before we saw that parabola, the price high, overtaken. And that was the guy being hawkish. So that's weird. How would a bright guy model that on an ex-ante basis? And then you saw its opposite. Again, Bernanke said helicopters, printing presses, and he's the Fed chairman who resides over the 10-year treasury at the end of 2008, hitting 2.1%. So hitting the joint low from the early 1940s. Hard to anticipate that. That's weird. But the joy of our life is that weird things happen. And so as you move forward with your careers, I would say that's an underappreciated skill set. The skill set of the maverick, the skill set of disciplined curiosity. That's how I take that.
I love what he was saying there at the end, though. Because a lot of logically thinking people would say, oh, the Fed chairman took XYZ action, the markets will go this way. They didn't go that way. This is the idea of being agnostic. This is the reason that I played the XTC clip at the very beginning called Dear God. To stay open-minded. You don't know what's going to happen tomorrow. You don't know where the market is going to go. Whichever market you're following, a diversified portfolio, or one market. And if you're only following one market, let me just repeat, you can't be a trend following trader. Trend following traders got to follow a bunch of markets because you don't know which one's going to take off. That's just the bottom line. So I love that clip from Hendry because I think he gets at some root essence of being a trend following trader. He talks about emotional intelligence, not wanting to know, keeping an open mind, being wary of the person that walks into the room and says, I'm the brightest guy in the room. Look at me, look at me, look at me. I know all of this information. I've got a theory about what's going to happen tomorrow. And then the market goes completely different direction. And that hedge fund goes belly up and becomes a footnote in history. That's just the way it works. So I find it really interesting that a guy that doesn't hold himself out as a technical trend following trader sure sounds like one. And whether he is or is not is irrelevant to me because the lessons, what he says, is important for my audience. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.